For anyone venturing into the world of personal or small business finance management, understanding core accounting concepts is crucial. When you start using a double-entry accounting software like GnuCash, you'll quickly encounter terms like assets, liabilities, and equity. While assets and liabilities often seem straightforward, equity can sometimes feel a bit abstract. As an accounting software expert, I'm here to demystify equity specifically within the context of GnuCash. Forget jargon. We'll break it down into plain English, making it easy for anyone, from a curious beginner to someone looking to learn for educational purposes, to grasp this fundamental concept. The accounting equation, the heart of equity. To truly understand equity, we must first introduce the cornerstone of all accounting, the accounting equation. It's simple, elegant, and incredibly powerful. Assets equals liabilities plus equity. Think of this equation as a balance scale that must always remain level. Assets. These are the things you own that have economic value. For a personal user, this could be your cash in the bank, your car, your house, or investments. For a business, it includes cash, accounts receivable, money owed to you, inventory, equipment, and buildings. Liabilities. These are the things you owe to others. This includes loans, credit card debt, mortgages, and accounts payable, money you owe to suppliers. Now, let's bring equity into the picture. Equity represents the owner's stake in the assets of the business or the individual's net worth. It's essentially what's left over if you were to sell all your assets and pay off all your liabilities. In simpler terms, equity equals assets, liabilities. So, if you own a house, an asset worth NGN 50 million, and you have a mortgage, a liability of NGN 30 million, your equity in the house is NGN 20 million. This is your ownership claim on that asset after accounting for what you owe. Equity in GnuCash, the root of your financial picture. In GnuCash, equity is a top-level account type, just like assets and liabilities. It's the category where GnuCash tracks your ownership position. When you first set up your GnuCash accounts, you'll typically have an equity section with several sub-accounts. Here's how various types of equity accounts typically manifest in GnuCash, depending on whether you're managing personal finances or a small business. For personal finance in GnuCash. When using GnuCash for personal finances, equity primarily represents your net worth. The core equity accounts you'll encounter are often opening balances. This is a crucial account. When you start using GnuCash, you'll likely enter the current balances of all your existing bank accounts, loans, and credit cards. GnuCash uses the opening balances equity account to balance the books at the very beginning. For example, if you start with NGN 100,000 in your checking account and NGN 50,000 on your credit card, GnuCash records a debit of NGN 100,000 to assets, checking account, and a credit of NGN 50,000 to liabilities, credit card. The balancing entry of NGN 50,000, 100,000 to 50,000, is posted to equity, opening balances. This account essentially represents your net worth at the point you start using GnuCash. Retained earnings, or similar while more common in business, for personal use, this might implicitly represent the accumulation of your income less your expenses over time. Income and expenses. While income and expense are separate top-level account types in GnuCash, their net effect directly impacts your equity. When you earn income, your equity increases. When you incur expenses, your equity decreases. At the end of an accounting period like a month or year, the net income or loss from your income and expense accounts is effectively closed out into an equity account. Though GnuCash handles this implicitly in its reporting, showing your net worth increase or decrease. For small business in GnuCash. For a small business, equity accounts become more nuanced and reflect the different sources of ownership capital and retained profits. Owner's equity/capital accounts. This represents the money or assets the owners have invested into the business. If you put NGN 1 million of your personal savings into your business's bank account, that's a debit to an asset, cash, and a credit to equity, owner's capital. Owner's draws/dividends. This account tracks money or assets the owners take out of the business for personal use. When you take money out, It's a debit to equity, owner's draws, and a credit to an asset, cash. This reduces the owner's stake. Retained earnings. This is a critical equity account for businesses. It represents the accumulated net profits or losses of the business that have not been distributed to owners as draws or dividends. If your business makes a profit, that profit adds to your retained earnings, increasing the business's equity. If it incurs a loss, retained earnings decrease. Opening balances. Similar to personal finance, this account helps establish the initial financial position when you begin using GnuCash for a business that already exists. Why is equity important in GnuCash? Understanding and correctly tracking equity in GnuCash is vital for several reasons. Measures financial health. For personal users, the equity section in GnuCash directly shows your net worth. It's a snapshot of your financial health, how much you truly own after considering all your debts. A growing equity balance indicates improving financial health. Shows business value. For businesses, equity represents the theoretical value of the business to its owners. It indicates how much of the business's assets are financed by the owner's investment and accumulated profits, rather than by debt. Helps decision-making. By monitoring your equity accounts, you can make informed decisions. For a personal user, it might indicate whether you can afford a new large purchase. For a business, it can help determine if the business is generating sufficient profits to reinvest or if more capital is needed. Ensures double entry balance. In GnuCash, as a double entry system, every transaction affects at least two accounts. Equity accounts play a crucial role in maintaining the fundamental balance of the accounting equation. If your assets don't equal your liabilities plus equity, something is wrong with your entries. Foundational for financial statements, equity accounts are key components of the balance sheet, statement of financial position. The balance sheet provides a comprehensive overview of a business's or individual's financial standing at a specific point in time, and equity is a major part of that picture.